City managers' reports and comments.
Mayor and members of the council, as we begin and kind of continue on with the transition of management here at the City of Corona, I felt it was important to start a multi-pronged approach to auditing our financial status, to give you an update, give me an update, and get a better understanding of where we are and how we actually compare to other cities throughout Southern California. To that end, we're starting with the 2013-14 fiscal year. This is sort of a look back as we're kind of concluding our 14-15 year. We did a good base level audit of this. We've done some comparable cities, and we have a very, very patient Debbie Harper here tonight to go through it with you. She's with the firm LSL. They're certified public accountants. They have 3 offices ranging from Silicon Valley to Riverside County. They do a lot of auditing for states and cities and counties, I should say, up and down the state. And she's going to go through this, and then you'll see shortly, sometime around, I'm hoping October, an even bigger and deeper audit of the year that we're getting ready to conclude now. And we're going to continue on this path from this point forward, actually. And to that end, we'll turn it over to Debbie to kind of walk us through where we're at and how we're doing.
Perfect. Thank you. Thank you for having me here. I just want to start off by introducing myself. I know this is the first time that I'm up here speaking with you. I am the auditor. I know you didn't know that. There was an auditor in there. I'm the zinger for the City of Corona. So I work very closely with the finance department. I'm the audit partner on this engagement. A little bit about me. I've been with the firm for about 14 years. And I work very closely with a lot of organizations that are specialized in local governments, one being the state of California, being on a special committee that I'll talk to you a lot today about GASB 68. I'm sure you guys are well aware of. They call it the pension pronouncement that's coming out that's going to have a very big impact on all cities in this next coming fiscal year. So I'm on that committee. We actually wrote the white paper. There was 5 of us on actually implementing that for local governments and actually to other auditors, how to implement that. In addition to that, there's a national committee that I'm a part of. Our firm is a part of a government audit quality center. It's important to you because it holds our firm up to higher standards. We have additional requirements as far as having a very quality audit. When we come out and do local governments, it's specific to people who actually audit governments. And there's a small executive board of about 15 that represent all of the United States. And I'm one of those members that meet in Washington, D.C. A few times a year to go over those standards and the resources and just actually evaluating other audit firms all across the nation. So that's part of my committee. A little bit about the firm. The firm's been around for a long time. It's been around since 1929. And we have 3 offices. The office I work out of is the Orange County office. It's located in the city of Brea. And that's our headquarters, and that's where the majority of the government audit professionals are headed, or actually out of. Our firm is a full-service firm. We still do taxes. We do other commercial audits, consulting services, but about half the firm is actually specializes in cities. I think we have the most cities in all of California as far as auditing. We really specialize in cities. We've been doing that for over 60 years now. We have over 65 local governments, 45 of them actually being cities themselves. Let me start to give you a little brief understanding of what I'm going to talk about today. Now, we did already perform the audit for 2014, which I'm going to give you, just revisit some of those results. But I just want you to be aware of the information that we provide to you when we do give an audit. You should always expect to have 3 different letters when we give you the results of an audit, one being a communication letter, and this is done at the end of the audit. And what this letter does is it summarizes, it does other stuff than the financial part of it and the opinion part of it. It gives you a broader scope of just how we worked with the city, the communication with the city. It's very different now. We have a higher standards of transparency as far as being auditors. So if we make journal entries, which has always happened for many, many, many years, we're required to disclose those to you now, whether no matter the size. We just need to let you know these things happen from the moment we got here. These are the adjustments we made that impacted the financial statements. So those are the kind of things that come on the audit communication letter. It also talks about things like GASB 68. It'll tell you this was implemented this year, these are significant changes that happen, or these are changes that are going to happen. Another letter is the report on internal control. Now that letter talks about any deficiencies that you have in internal control. That's usually a hot topic that you always want to look towards. This letter will identify those deficiencies for you, and you will see them spelled out in the letter. And then it also talks about compliance findings. If there's even compliance findings from other audits and we are aware of them as we come in, we summarize those in this letter as well, just to say that we're aware of them, these are what happened, and these are the results of it, this is how it was corrected. And then the last letter is the most important letter to you. That is the opinion letter. Now this identifies what our opinion covers. As far as your financial statements, it also spells out the responsibilities of us as auditors and the responsibility of management, and then it gives our opinion. So really quickly, you already got these 3 letters. In the audit communication, we did not identify any significant deficiencies or problems working with management. There wasn't any corrections in those journal entries either, so we didn't have any items to note there. And there wasn't any large changes in accounting or any changes in accounting practices. A big item that was noted on there was a significant transaction, which you will see this effect when I give you the financial information, and we usually spell it out in this letter, and that was a what we call an extraordinary item. Now, an extraordinary item is a material item that is outside the control of the city, meaning an outside person is requiring them to make this journal entry. That's what's extraordinary about it. There's no control over management about the entry. Now, the Department of Finance came in, and how you know, the redevelopment agency and the successor agency, they were doing a review of the redevelopment agency and the successor agency specific to the properties, and they were asking that the land held for resale that was sitting in the city's financial books to be moved to the successor agency, that they felt that they should be on the successor agency. So we had to move that amount over there, and there was a note disclosure. So that was spelled out. So those are good things that you should be looking for in those letters. That was spelled out in there. Another item was GASB. So there was no significant GASBs that impacted the financial statements, but like I said, we did note that 68 is coming, and I'll talk to you a lot more about that and how that's going to affect your financial statements. The report on internal controls showed no deficiencies in the internal controls that we became aware of. And then your opinion letter was the cleanest, highest opinion letter that you can get. It's called an unmodified, or they also call it a clean opinion. There was no modifications to our opinion. We said that the financial statements were materially stated correctly, and you can make good financial decisions on those. So that's a little bit about the results of the audit. Now I kind of want to look at the changes from fiscal year 2013 to 2014, and then how you compare to those cities. So what we did for the comparison cities, we actually looked at cities that had similar population or provided similar services. And then I did an analysis on comparing those to fiscal year 2012 and 13. And then I dropped in Corona's 2014 numbers to see where you moved from 13 to 14. Okay, so let's look at some of that information.
Can I ask you a question?
Sure.
So when you're talking about similar services, all of these cities then include their own fire department, their own police department, and their own DWP?
Not all of them, but I will point out the ones that don't, and you will see them fall off the chart.
Thank you.
Okay, so this is where I start to geek out a little bit, because I am an auditor, I'm in accounting, and I love financial information. So if I use accounting terms that you want me to go back and explain, just let me know, and I'll try to explain those.
Mr. Haley will.
Oh, okay.
Just for clarification, you used the word GASB a number of times.
Okay.
Our treasurer understands that our finance director, not everybody, could you give and I don't like acronyms, could you give the GASB?
And we're full of acronyms in the accounting world.
We don't do acronyms here, ma'am. Good, go.
It's the Government Audit, or the Government Accounting Standards Board. So
Thank
this
you.
is the board that actually sets the standards for governmental accounting.
Thank you very much.
Okay. So first, we're going to look at net position. So net position probably might not be totally familiar to everybody. Think of net position as like owner's equity. And when you're looking at it in other financial or in the public sector, or like net worth, personal-wise, you can look at it as all your cash that you have in the bank, all your pension assets, all of your home, less the amounts that you owe, less your credit cards, less the amount you owe in your home. The remaining amount is your net worth. That is exactly what net position is. It's that amount. So my first analysis here is actually looking at your net position in two subcategories, one being governmental activities and one being business type activities. Now, business type activities is your, like your DWP, your transit, and your airport. Those are the business type activities. All the other activities, such as your general fund, your other capital projects fund, debt service, those are the governmental activities. So that's the difference between the two.
Okay, so to find out the trans.
To find out the what?
Trans, you said it includes DWP, the airport, and trans.
Transit.
So that'd be like Corona Cruiser, Dial-A-Ride. Okay.
Yes.
It's not all our streets and
Right.
so forth.
Yes. Oh, okay. I'm sorry.
No, that's good. Thank you.
Okay. Yes. So looking at that chart, let's look at the top chart. So just so you have a perspective of how Corona compares to the other cities, the average, now just the governmental activity, so this is the blue, the average governmental activities net position for fiscal year 2012-13 was $671 million, where Corona was well above that. Their net position was $932 million. So they're well above the average of those comparable cities.
Now, when you say net position, is that cash in the bank? Is it assets? What is it?
That's that owner's equity net worth that I was talking about.
So it's
that's all your
basically
assets,
all of it.
less your liabilities, what's left over.
So it's assets and cash.
And this average is state of California you're talking about?
No, the average of these similar cities.
Oh, just of the,
Of what
of
we're
these
comparing
cities.
to.
Oh, I see.
Yes, just these cities. So you're above that. And when we look at your business type activities, this is where you could see the cities that kind of fall off. The city of Marietta and the city of Temecula do not have business type activities. So you could see in the red how they don't have an item there. So I did not include them in the average. I didn't include it as a zero. I actually just eliminated those. But the average business type activity net position was $171.7 million. And Corona was just above that at $189 million. So that's just your net position we're talking about right now, but we're going to break it down even further.
how'd you come to pick these cities?
Population, we looked at different population, and then we looked at similar services that we provide. So most of them do have police and fire, because that's a big difference as far as different cities, how they operate. Some of them do have contracts, but we try to get similar ones that have police and have fire and are similar in size.
So as we're going forward, Marietta and Temecula are the only two that don't have police and fire.
They don't have business type activities. They have police and fire, but
Not DWP.
right.
Oh, okay. That's right, thank you.
So if we look at the bottom chart, this one is doing a comparison of just the city by itself from 2012-13 fiscal year to 2013-14 fiscal year, so this past audit year. So the governmental activities net position actually decreased by $34 million. And the reason why for that this was impacted by that extraordinary item that we talked about. So we took some land held, which is an asset, off of the city and put it in the successor agency. So that had the big impact for the decrease in your net position.
Was all of that 34 million, or was there?
It was, well, most of it was, because the actual move of the assets was 56.9 million. So you actually probably would have had a positive increase if you didn't have that reduction of the land and house for resale. And then if we look at your business type activities net position, it also increased by 13.6 million. And when we looked at that, there actually wasn't any change to the revenues or expenditures. So you have this net increase of about 10.4 million that's just coming from normal operations. But on top of that, in that particular change from 13 to 14, there was a sale of some assets in there as well, which produced a gain in your net position of 2.5 million. So those two combined was that increase of 13.6. Okay, so now that we just at least know the balances, what's important is to look at the makeup of what's in those net position, because it's not just cash that's sitting in there. So, for example, the first slide at the top, it's comparing All the cities, again, just for governmental activity. So this is not your DWP, your transit, or your airport. This is just your governmental activities. Now, you can have a really strong net position, so a high dollar amount, but if it's being all held up in capital assets, non-cash items, or restricted for specific items, it's not available for spending, for meeting your expenditures. So that's why I wanted to look at this slide. And so let's look at comparison for the different cities. So Corona's unrestricted net position was well above the average. The average unrestricted, so this is the amount that's not restricted for debt service, meaning you can spend it for future expenditures. It's not made up of all your capital assets. It's available for operating expenditures, was well above the average. The average was about 12% of unrestricted net pension, where Corona's is at 28%. So a lot of your net position is not held up in capital assets and in restricted assets. So that's a good thing. So, but do remember that your governmental activities did decrease a little bit by that $34 million. So when we looked at that, the net investment in capital assets of total net position, so the net investment in capital assets, that is all of the infrastructure and the assets of the city, less any debt owed to take out those assets. That's what net investment in capital assets is. So it's not cash. It's not something you can write a check from. Okay, so the net investment in capital assets is the actually increased from 58% to 62%. So since that land moved out of there, maybe the proportionate share of that of the net investment actually went up a little bit, but that's expected because you saw that amount leave. The restricted assets actually decreased, and that was mainly due to the capital project restrictions. So if you have a commitment for capital projects, then you have to restrict those funds for it. And when those projects get completed, they are unrestricted. So that's why you see that decrease. And then your unrestricted net position actually increased, which is a good thing, from 28% to 30%. And it's available to meet future obligations.
So before you change from this slide, going back to the top of there, so when you look at a city like Marietta that has, according to this, only $5 million basically of cash available for, that's unrestricted, that's not already promised for something?
Right, they actually have less than that, because the red is the net investment in capital assets. The restricted, which is the blue amount, that's actually restricted for like debt service.
So there's not
payment.
even room to put in the green,
Right.
the amount.
There's
okay.
barely any green
And the
there.
same with orange, has a very small amount.
So it's mostly tied up in infrastructure. So when people look at their net position, you actually have to look at what's inside that net position. Because if it's just held up in infrastructure, that's
So
not
if we
gonna
had gone out and built some buildings and encumbered them, then that would reduce that cash asset.
Right, exactly.
Okay. Thank you.
So that's the governmental activities. Now we're going to switch over to your business type activities, which is your DWP.